Okay, guys, we got the Tesla earnings out. They have beat the estimates across the board here. We have earnings per share coming in at 227. The estimates was for $1.83. We have revenue coming in at 16.9 billion when the estimates was 16.88 billion. So it's pretty much like in line, but hey, they're still going to count that as a beat. The stock isn't doing anything really crazy. It surged about 4% up after hours, and now it's settled in. It's about 1.5%. Now that can change quite a bit, especially once the conference call starts and people start asking questions, and you can have some responses, some guidance, some things that they don't like, and the stock sells off. So that's a possibility too. There's a lot of times in earnings where the numbers come out, it's a very positive response, or it's a very negative response, and then the exact opposite takes place. There's either a sell-off or there's a rally based off of what happens in those conference calls, the questions that are asked, and the news that is presented. So good start for Tesla, but we're going to talk about that stock quite a bit here. We're also going to get into the S&P 500. We're going to get into the Nasdaq, talking about some of the stuff that we've seen since the last live stream I did, because it's been a crazy 5 trading sessions. Not been necessarily good for me either. I'm not saying like, hey, I've been doing good. I haven't. I made a new trade, and it kind of like just beat me up pretty good. And it started off great, but that reversal on Monday, yeah, that was it really sucked me in from the short side. I got short, was up about 2% going into Tuesday, and then that nasty reversal. So we'll get into that as well, because one of the things that I don't want to do is make you ever think that I'm a perfect trader or that trading is easy and you just everything that I buy goes up, because it doesn't. There's plenty of losses along the way, as it is for any trader that's being honest with you. So make sure to put it down in the comments below whether you're watching on YouTube, Twitch, Twitter. I don't think anybody watches on Twitch, honestly, but Twitter or Facebook. Post the stocks or questions that you want me to cover, and I'll be happy to do that. I can't say that I'll have an answer for all of your questions, but usually for the charts, I can give you guys a little bit of what I'm seeing on those charts. So also make sure to like and subscribe to this video. You can do that by just clicking down below. There's also a membership feature too, that if you want my videos or more stock market research each and every day, you guys can do that. Get all my different watch lists and stock setups that I'm looking at from a day-to-day basis. So check that out down below. Hey, we got one guy saying he's watching on the radio. I'd be pretty awesome if he was, but and anyways, let's go ahead and jump in on the Tesla chart here. Okay, got a clean chart here to work with. So what am I seeing here? So I think Tesla's actually been one of the more boring charts out of all the big tech stocks of late. There just hasn't been a lot going on. A lot of people are still trading it like as if there is, but really there hasn't been. It's been stuck in this really a nasty price range. And so maybe I thought earnings would give us the ability or the opportunity to bust out of that range. And so far that just hasn't really been happening. So this is your range right here. You have essentially some support at like the 627 area, and it goes all the way up to like 767. And it's just been stuck there for about 2 months now, and it's getting a little bit tighter. So one of the things that I've noticed as well inside of this range, and it doesn't make it any easier by any means, is that you also have this triangle pattern in it, right? And I'll just go ahead and change the colors for you guys just so you can see it a little bit better. But you have this triangle pattern that it continues to trade inside of, and it doesn't get any easier to trade as long as it's in that triangle pattern. So with the earnings, you're hoping that, okay, maybe we'll get a break higher or break lower, but we'll get some kind of resolution to this trading range that we've been trading in for all this time. And when you look at what it's doing post-market, it's still inside both of them. I mean, granted, we tried to break out of it in the post-market, and that still may change. You may wake up in the morning and it's trading at $800. That's very possible. I mean, we saw Netflix surge 8% after hours yesterday, only to open up in trading to the downside at the open. Yes, it did quite well into the close, but even so, it still managed to give up all of its gains before finally regrouping and rallying higher. That was on Netflix yesterday. So there's the potential for some kind of craziness like that to take place, especially with a stock like Tesla, with all the headline risk that's usually associated with it. And here you got the triangle pattern, you got the stock. I mean, I did see even at the beginning of this live stream that it was a 1.5% from where it closed the day at. Now it's barely even up like 0.5% from where it closed the day at. So triangle pattern still stuck inside of it, and this trading range, it's still stuck inside of that. So do you really want to get bullish or bearish when all we're doing is just bouncing off of these extremes the whole time? I mean, there's no clear trading edge on Tesla. So if it gets back above 800, or let's say about 770, okay, 770, then you have a legitimate breakout opportunity here. Now, then the key becomes, can you get into the trade with a reasonable stop loss that's able to maximize the reward to risk ratio? Because if you're putting your stop loss in at around 770, or you're getting in around 770, and let's say you're putting your stop loss in at 681, that's like $90 that you're working with. So to get a 3-to-1 return, you need the stock to jump $270, which I don't know what you needed to go all the way up to like 1040 or something like that. So you're talking about maybe a little bit too optimistic outlook for the stock in the short term if you're a swing trader. So you really want that to be tightened up some, maybe as much as like 713. But even still, you're talking about almost a 10% stop loss if you're getting in at 770 with a stop loss, let's say below 710. So about $60 to the risk side. You're hoping to get about 120 to the upside. So then still you're hoping that it can get up to about 890 on this risk or on this trade setup. Again, we're in a bear market. Yes, the last 2 days have been nice, but it doesn't change the fact that it's very difficult to make long-term gains in a market like what we're currently trading in. So you have to really look at it from a short-term perspective. So that's really what I'm looking at on Tesla. I mean, ultimate resistance still remains up here at around 11, just below 1100. That's continuing to decline as well. And I don't really see that getting tested anytime soon. That's going to have to be like the market bottoms in and we're ready to make a big pull back up to this 1100 area. I don't see that happening yet in the broader market. So it's hard for me to believe that we're going to see that in Tesla as well. But you've also seen a lot of the other stocks, EV related, doing pretty well itself. I mean, there's some good setups out there. You have Lucid, for instance, that's setting up quite nicely here. Now, we're not seeing as much of a movement to the upside post earnings out of it. In fact, it looks like it's a little bit lower from the earnings report since it came out. Yeah, it looks like it's notably lower, maybe about like 1%. It's a wide bid ask on it, so I definitely don't want to be trading that in the after hours. But if we're just looking at it from a daily standpoint, you've got a nice basing pattern here. So it did break out today just a little bit, right? Got a little bit of an action out there. Since the Tesla earnings came out, it's trading right at that breakout level again. This is a nice chart. Again, the question is going to become, where do you put the stop loss? Right here, it's like 15%. LCID is very volatile, so not necessarily a stock that I want to take a 15% risk on. So we need to see maybe a little bit better consolidation now that it's broken out. Maybe it can consolidate here. Maybe here's the other thing. This would probably be the best situation is if it can rally a little bit, let's say up to 23 or 22, and then it pulls back some light volume pullback to this breakout level, holds the breakout level and starts to bounce again. Then you would try to get in on that bounce with a stop loss below the breakout level. So a couple of things that I'm watching for there. You also got NIO. This is another popular one as well. It's like in this forever bull flag pattern. It doesn't ever seem like it wants to break out of it, but it's kind of like Tesla and its sideways trading action. It just never seems like it has a desire to move out of it. But you got a little bit of I mean, some people say it's not really a bull flag pattern, and they're not necessarily wrong for saying that, but it's more like a bullish wedge. So, or you can even say maybe like a continuation triangle in a sense, but if it can get above this 2162 price level, that's where things start to look a little bit more on the up and up. Again, the stop loss is going to be key to it. So if we can get up to this level here, consolidate some, and then break out, that's where it becomes a little bit more ideal. With all that said, okay, we've looked at LCID, we've looked at NIO, we've looked more importantly at Tesla and how it's going to affect the market. It doesn't look like it's like crashing the market after hours a little bit. I think you got the Nasdaq futures that's pulled back a little bit since it's closed. But let's look at the broader markets here. Again, remember, keep posting your charts or your stocks that you want me to look at from a charting standpoint. Appreciate the kind words you guys are saying here as well. In the comments, appreciate that. Always appreciate the feedback. So SPY, let me tell you, this is what happened to me on Monday, and it really got me torqued. Monday, I got to figure out how I drew it now. All right, so we had this nasty sell-off, okay, on Monday. And that happened after we were having a pretty sizable rally, right? We had this nice rally. And you can see multiple times we've tested this declining resistance level going back to April. And each time we've had significant sell-off. So when I saw us hit this level, and we were up like 1.5% or so on the day, SPY looked like it was going to possibly break out of it. And then on like on a dime, this thing reversed and went straight down. So I took that as an opportunity to get into SDS. I had about a 3.6% stop loss, or maybe it was like 3.5. But I was fine with the reward to risk ratio on it. I felt like, okay, that hard reversal, good chance we probably see a retest of these lows here. I thought that was like kind of the target that I was aiming for. And for those who don't know what SDS is, it's a 2-to-1 Embers ETF of SPY. And holy cow, the next day, yesterday, really no news in the market. There was nothing. We had low volume, no news. I mean, it was just really, you would have thought that the market cured cancer or something. It was nuts. And we just break right out of it. And so I get stopped out of it. I have my stop loss right above these highs right here, because it was kind of like it lets me draw it right here. This is where I have my stop loss at. It pushed right through that into the end. So that was disappointing, because I went from about 1.9% in profits to a 3.6% loss. I followed the trading plan, so I'm not disappointed with how I managed the position, just disappointed in the outcome. And that's going to happen with trading. Stop losses aren't something that I enjoy. I don't enjoy getting stopped out. I don't enjoy talking about the risk on trades. It's more fun to talk about the profits. But if we're not focused entirely on the risk of what happens when we go into trading, we're likely to be doomed by it. So I could have just completely thrown risk out the window, but I'd be down even more today. So it broke through the 50-day moving average, broke through that declining resistance right here. So now, I mean, where are we going from here? Well, you also have this breakout here, right? We talked about the breakout for the stock we'll talk about how I got stopped out on SDS when SPY broke above these highs from June 30th or June 28th. And now we're pushing way back above it. So now you want to start watching out for some of this resistance right in here. That could come into play. You also have some heavy price level resistance right here. That's kind of in conjunction with this box where it starts at. So trying not to messy it up too much here, but these are the kinds of levels that you want to be watching for on the charts. Now, I actually tried to get long on 2 stocks today. Was unsuccessful on both of them. One of them was Amazon. Was looking to get in on this little triangle breakout here. Right there. Really nice. Couldn't get into it. Just broke right out right at the open. We were like 2% up or so after the first 30 minutes. I'm not going to go chasing it. Yes, I still would have probably I would have been up about 1% on the trade so far today if I would have gone ahead and chased after it anyways. But from a reward to risk ratio standpoint, it's, when you start expanding the risk beyond what you originally set out to, you're also cutting down on the potential reward. So the risk was getting bigger, the reward was getting smaller to an extent that I wasn't comfortable with. Same thing with Disney. Disney had a really nice base that was forming here, and really caught my eye last night as I was looking at the charts. And you guys will also know that I posted it on Tuesday as well for the members on the YouTube channel, and it broke out today. This was even harder one to chase after, because I wasn't willing to jump in after it was already up like 2+% after the first 30 minutes, because then my stop loss was around 6 or 7%, and that was just too much from a reward to risk ratio for me to go ahead and jump in. If I could have kept it around 4%, yes, that I would have been on that. Same thing with Amazon, but I couldn't keep it to that type of parameters. So, so that's my take on Disney, my take on Amazon. Tried to get into both of them, couldn't. One of the things that a lot of traders will get caught up in is chasing after stocks. Chasing after stocks when you've seen this kind of rally that we've seen in the last couple of days with SPY. And here's what's the most interesting take about SPY. We're down 6 out of the last 9 trading sessions on SPY. 6 out of the last 9. And yet, it's trading 1.5% higher. So just because you get a bunch of down days doesn't necessarily mean that the market's going to be in your favor. In fact, it usually has to do with the extent of the selling. So like on this particular sell-off, we had 5 straight days down on the SPY. And yet, it wasn't that strong. In fact, you'll see on 3 of those 5 days, we were opening up lower than where we closed at. So there was a clear buy the dip mentality on it, and that has been pervasive all the way through up until today. The one thing that got me caught off foot or got me wrong-footed was this sell-off right here at resistance. Man, I'm a little bit irritated about it because it kind of leaves me chasing that, wanting to chase after it, but I'm not going to. So, and we got the spam bots coming in here. All right, got those guys. Every once in a while you do these things and people are trying to spam your live stream. So, so we got Vince. He was talking about Tesla as well. Likes to fill gaps, so that open is good. Very bullish. Let's see what gap he's talking about here. That's definitely not Tesla. Not sure which one of the gaps he's talking about. I mean, it's just been really a choppy price session ever since. But let's see here. Yes, I do have some good t-shirts. I still wear them for the most part. You just can't always see them with the camera angle. But I need to change my camera angle because it's starting to annoy me that you guys can't see the shirts that I'm wearing anymore. So I got to do a little bit of behind the scenes work on this whole setup here to get it looking right. EOG is asking for Bitcoin, SoFi, Ethereum, and MU. So we'll start with SoFi, then Ethereum, and then we'll get into the cryptos here. All right, MU. First off, I got to let you guys know too. Drinking Old Elk, not my favorite, okay? It's not bad, but not my favorite. It's a blended straight bourbon whiskey. So not too bad, but you know what? It hasn't been a Blanton's kind of a week. It hasn't even been like a Buffalo Trace kind of week. So, hey, I get to drink what I deserve right now. Really, it's not anything too special. So with Micron, oh, boy, that one hit a lot harder than I was expecting. Micron, you have some resistance here that's taking place. Sometimes I like to refresh what I've looked at in the past on the chart. So just to make sure I'm not contradicting myself either. So there's a couple of things here. You have price level support that has been pretty consistent. Hasn't tested it yet. So I would say there's like 2 levels of resistance right now on MU that we want to be concerned with. You can see that there's a glaring double top pattern here. And it's confirmed the double top. And so far, it's trying to make this, it's a significant rally back. I mean, it went all the way down to like 51. It's at 63. So you're talking about more than a 20% rally on the stock. But there is resistance here. The first one being this declining resistance that goes back to December of 2020. That one so far is being tested. It hasn't broken through it, though it had a good rally today, 1.5%. But is right at that resistance. So that's the first thing you want to watch. And we hadn't talked about that resistance level before. Sometimes they don't stand out to me as, you know, as some others, but this one definitely stood out to me today. That's why I like to do sometimes like a fresh chart, because sometimes you can just be drawn to what you've drawn before. And so looking at it from fresh and anew does help, but I also don't like to forget about what I drew before. So you'll see me at times I'll go back and look at some of the stuff that I've done on these charts. But right now, you also have this price level resistance. It's not anywhere close to being tested. It's about, I don't know, a little less than 5% away. So like 66.28, 66.30. let's actually say 66.50. Okay, it's not a perfect science when you come down to the exact penny, but I think 66.50ish would be a good level to watch. You can see right here, I mean, multiple times from here, and then all of this right in here when it was trying to not break down, but eventually did. This 66.50 level was pretty strong. So right here where it's currently testing at about 63.40, and then it's saying 66.50, that's going to be the key levels to watch on Micron going forward. So overall, I mean, semis have been hot, right? I mean, I did a video on Monday on Nvidia, and a lot of people seem to be interested in that video that I did. But a lot of that's because you got Pelosi buying the stock up, and so everybody's like, well, if she's doing it, she's probably going to make a lot of money off of it. I'm going to jump in there with her too. I would probably say don't follow people just because you think they might have like an insider edge or something, because Nancy bought Roblox too, and that didn't work out too well for her. She also bought Google. That didn't work out too well. I think Roblox is down 60%. Microsoft is down 25%. There's another one too, and I still can't remember it. I keep forgetting what the third one, but actually, do I have it in my notes? No, I don't. But there's another one too. It's like down like 30+%. So she's not necessarily like Warren Buffett when it comes to these stock picks. Yes, she's had some big winners, but she also had the big winners during the bull market run of the last 13 years. She hasn't been quite successful so far this year. Now, doesn't mean that she won't hit it out of the park in Nvidia. It's up 6 days in a row. You can see the volume is really strong on Nvidia as well during that time period. Last 3 days alone, I've seen a surge in buying, especially when you look at it from the overall market, where volume has been either average or below average, and we're in the summertime too, so the volume comes in pretty light as well during that time. So Nvidia, and I know I got kind of sidetracked here, but it's probably, a lot of people are asking questions about it. You have a bullish wedge there. I feel like I can draw this bullish wedge multiple ways. I mean, it's still a bullish wedge. I mean, you can use that as your bullish wedge. Heck, you can draw this as your bullish wedge. I mean, you can just, there's bullish wedges everywhere on this one. And so it's broken out, but there is some resistance here too to be mindful of at about 205. I mean, even if it gets to that point, and it stalls out at 205, that wouldn't be a failure. That'd be still a pretty significant move, but still things that you want to be mindful of with this trade. Also some resistance at around 189. So MU, gave you my thoughts on MU, Nvidia. The other one, let's see, SoFi. Let's see here. Again, this is the one that people hate on me for on like stock twits and stuff, because I give my opinions on it. I'm not going to sugarcoat it necessarily, because in the end, I really don't care about the stories behind the stocks. I don't get married to the stocks. I get married to risk and reward, right? So if it doesn't follow my reward risk ratio, I'm not going to give a rip about what kind of stock it is or who it is, or if it's Ryan Cohen or Warren Buffett or anybody else. I need it to follow what I need from as a trader in terms of my risk reward preferences. It has to follow those parameters. So SoFi, declining trend line. It's broken the declining trend line, but it almost did it by default, not necessarily with a big rally. It just kind of traded sideways for a good while, and it's been trading sideways really, when you think about it, since April. It hasn't really made a significant move, but it's been forming this massive base going back to April. And you look at like SPY too, and I don't want to keep going back to SPY, but it's been trading sideways since June. So, seeing some of this choppiness in a lot of stocks, it's not all that surprising considering what we've seen from the overall market. You take a look at the Nasdaq, same thing. It's been very choppy since May, in fact. And we haven't even talked about the Qs, so I'll talk about that here after SoFi, and then we'll get back to Bitcoin and Ethereum and the rest of y'all stuff. But declining trend line, SoFi needs to get back above this resistance here, so probably like around 778. But again, this is a high risk, high reward play. I tend to go for more of the low risk, high reward plays. I want stocks that I can risk, or make $5 for every dollar that I risk. That's the kind of stuff that I want to go for, 3-to-1, 4-to-1, 5-to-1, those kinds of plays. This one here is probably going to be more like, okay, you put your stop loss. I don't know where the heck you put it on SoFi, quite honestly, just because if it breaks out, let's say 778, the nearest stop loss placement is like 574. So you're like looking at, it gets up to like $10. Okay, you just didn't even get 1-to-1 on your reward to risk ratio. So that's why you don't see me trade a lot of these real volatile plays at times, is because it's so hard to get an ideal reward to risk ratio. And if you're going to make it in this business, reward to risk is what it all comes down to. If you're not making outsized returns on your reward versus the risk that you're taking on, it's really not worth it. So let's look at the Qs real quick here. We broke through this decline resistance here. You also had kind of an interesting charting pattern. We've since broken out of that one today as well. We closed right on it yesterday, broke through it today. So get rid of that thing for a second. It's almost like a bearish flag pattern. Maybe some people would say, hey, that looks more like an ascending triangle pattern. But it broke out of it today regardless. And now you got some resistance here to be concerned with. Right around this, like 312 level. So we're currently trading at 303. If that continues to push higher, you're going to want to be mindful of the resistance that's right there. So keep an eye out for this resistance at 312 and see where it goes from there. I'm not really crazy about chasing after stocks right now, chasing after these indices. Yes, I would have loved to have gotten into some of my trades today and seen where they could have taken me, but I needed them to happen at a much lower price level. When that doesn't happen, I'm not going to chase after them because I wanted to be in them. Yes, I wanted to be in them. I needed to be, not needed, but the market doesn't care about what I want or what I need, even though I wanted to be in them. So, gosh, that sounded like a word salad. I apologize if it was. Brian complimenting me on the t-shirt. I'm just wearing the typical SharePlanner shirt, which actually you can get down in the bottom of this channel here on YouTube. I actually sell them. I don't even think I make hardly any profit on them. I think it's just cool if people wear them. So it is actually a pretty soft shirt too, by the way. Thank you, Brandon, for being a new subscriber. And then we got Chris Colvard here. Can you check out UNH? I'm bearish on it. It never runs with the index, so it's a pretty tricky one to play. Waiting for a triple top rejection. All right. Let's look at this one. Well, you're not kidding about it being a tricky one. I'm just kind of curious what some of my notes on this has been in the past. You know, we did a Pfizer. That's not the same thing. It's in the healthcare sector, right? But it's kind of curious because I remember it being close to breaking out right at this level here, and it never did. It's since pulled back some. And XLV really hasn't been that bullish since this market tried to turn around over the last few days. I mean, it's actually trading lower since it's open yesterday. So something to keep an eye on. So maybe UNH isn't necessarily a bad play here. Go back to the scratch board though. So right here, this is going to be your key support level. So if it gets down to this level and breaks, man, it gets a lot more bearish at that point. But you got a little bit of a declining resistance right there as well. This is a hard one to figure out. I mean, he makes a good point of like, this thing doesn't always follow what the market does. It certainly doesn't do that. I mean, it actually had a pretty good run through the end of June or through middle of June until today, or until yesterday, actually. Watch this pull back to this trend line here. That's going to be the first layer of support. Can it hold that support level? It's only tested it one other time. So keep an eye out on that. If that breaks, then the next level becomes probably this layer right here at 492-ish. And then from 492, I would look for a much bigger move, maybe like 10% drop down to about 450. All right. Good stuff there on UNH. It's definitely an interesting chart. Confirmed recession by July 28. I don't know. I don't know. Because I think the I don't really necessarily know on that one. I don't know what the significance is of July 28th per se, but maybe I'm missing something there. But let me know, and I'll circle back on that question. Oh, wait. EOG, he might have already posted in the comments, but let me see if I can. Man, freaking bots are all over the place here today, huh? I'm having to delete these things because they're so they're horrible. Jeez. Okay. We were asked about Bitcoin and Ethereum as well. So Bitcoin, it actually didn't like the Elon Musk news. They've sold about 75% of their Bitcoin position, right? So I think they have like $960 million in profits from Bitcoin. And I want to say their free cash flow is like 630. So a lot of their cash flow must have come from their Bitcoin sale. But you do have a nice little base here that's formed. So Bitcoin did sell off a little bit on the Tesla earnings because of that. But there is a little basing pattern that's trying to form. And when you switch between charting platforms, this kind of can mess you up sometimes, but usually does mess me up. But right here, you have a base, right? Inverse head and shoulders pattern, in fact. So you got the left shoulder right there. I think on this one, I can actually draw it. I'm not gonna mess with that. Left shoulder, you got the head, you got the right shoulder, and then you got the breakout. So now the next layer of resistance is, okay, can it climb up to 28 from, where it's traded at right now, 23? So that's going to be the next level, 28,000. You can see it's tried to hold this level here, actually quite impressively. I didn't think there was a lot of support there at the 18,000, but it's managed to use that support and hold it quite impressively. Now, Ethereum. Still to this day, I don't know if I actually say that right. Holy cow, there's a lot of chicken scratch on this thing. Okay. We have a very similar, I don't know where some of this stuff comes from. It's almost like somebody else is using this thing, and I should be the only person that's using it. But I'm not that fancy with my charts. I don't know what the heck that thing is, like some kind of zigzag thing. Yeah, we just got to remove that sucker. There we go. That was stressing me out a little bit. So declining resistance on Ethereum. So any kind of rally that you get in this 2490, that's currently, it declines every day because it's declining resistance. But you want to watch this declining resistance here. So right now you got the breakout at around 1300. It's up to 1500. The best thing that we could get right now is if you can get maybe like a bull flag action going. So if you can get this thing to bull flag like so, then you can get that push back up to 2400. That would be pretty cool right there and provide a good reward risk ratio. All right, so what else we got here? Check out LAC. I can do that. It's a lithium mining company. Analysts like it, but the chart doesn't have me sold. So analysts don't really know what the heck they're talking about. I really don't think so. I mean, they got all the resources in the world, but they're really not that smart. So trying to figure out what we got going on here. I think this is one. No, I haven't really done too much chicken scratch on it of late, but you do have a trend line here, though. That trend line goes back a long time. That goes back to, looks like the March 2020 low. So we got a lot of price history here, a lot of tests of this rising trend line. And it hasn't really looked too vulnerable until the past month. You can see where it's not traded below it at all, not even on an intraday basis, until mid-June. It dropped below it, closed below it, then recaptured the next day, went on a little bit of a rally, came back, and early July broke back below it, recaptured it, and then it's been testing it ever since without a break. So again, it's going to be a difficult trade from reward to risk ratio. It's like 13-14% about. So you're looking at what, 26 to 39%, 39% if you want a 3-to-1 reward to risk ratio return. You got some declining resistance right there. I gotta tell you, boss, I'm not sure I'm not sure if this is it. Yeah, I think that what turns me off more so than anything, I could have been a little bit more interested in a stock like this if the stop loss placement could be a little bit tighter, but it's not. It's so freaking wide. Again, everybody has different approaches to the stock market, so my approach isn't necessarily the only one that works. There's plenty of others out there that does work. Mine emphasizes more the risk aspect of trading, which I really do feel like is the most important aspect of trading, much more so than you know, the profits you make, because the profits are only as good as the way that you manage the risk. I should make that a shirt or something. But declining resistance broke out of it. It's broken above the 50-day moving average, but you got a lot of choppiness here, and I'm not sure it's really out of it just yet. In fact, yeah, it looks like it's still in that choppy range. And if it breaks out of it, again, the management of the risk is going to be the hard part. All right, Skyheart, check out the earlier part of this video. We did talk about LCID quite a bit in the beginning here, but yeah, nice breakout right here. We talked about 2061 before. It's definitely above that. Again, I think the stop loss is going to be the most important part. Chris asks, do I typically close out trades before the market close? And no. Well, I'm not quite sure what he's going at there, or whether or not am I a day trader that never holds overnight. To answer that, I hold most of my stocks overnight. Anytime I make a trade, I'll usually, very rarely do I make day trades, but most of my trades are held overnight. If I get stopped out, it'll be any time during the day. Whenever that stop loss is hit, I'm out. Oftentimes I'll make other decisions near the close, not necessarily at the market close, but usually like within the last 15 minutes of trading, when I get a feel for where the market's going to end the day at. PayPal. You got some PayPal in the house, huh? Let's go ahead and look at that one. This is a chart. When you look at my chicken scratch, man, I have drawn a lot of levels on this thing over the past year or two. So probably over the past year more so than anything. This is the first trade I made this year. It did not turn out well. I think I took like a 2 or 3% loss on the trade. Wasn't my finest trade on the year. Decline trend line, that's broken, kind of like SoFi where it's broken it by default. Let me go ahead and just get a clean slate here going. Please, I want to make sure I drew it the same way. Okay, yeah. I knew I drew it a little bit better on that other one. You start to get paranoid a little bit, right? When you're drawing the same trend, trying to draw the same trend line, you're like, is that the one I just drew or not? But I knew the one that I drew was right, so I just wanted to make sure I was duplicating that. Nonetheless, yeah, this decline trend, I mean, it's nice that it's broken that. I mean, it's struggled with it since what, October? But now it's broken it by default because it's just trading sideways right through it. It hasn't really seen a lot. It hasn't attracted buyers at all. I mean, I think PayPal, honestly, is a good company, but it's got to prove itself technically to get me interested. And right now, I mean, until it can break above 87, there's really not a trade there. So breaks above 87, maybe there's a good stop loss that we can take advantage of, and then it can become a long setup. But right now, that setup isn't quite there yet. Nice, man. EOG brought some HNST. Yeah, that looks pretty good, man. Nice breakout. I mean, it's a little bit, I don't trade a lot of stocks under $10, but they usually carry a lot more risk. I mean, this thing's up 2.3% today, but that move from yesterday was gargantuan, 377 from 323. So yeah, almost like a 20% move there. So, but yeah, I mean, one of the things that you want to do on these big moves is making sure, at least in my case, I get a big move, I'm taking some profits off the table, because the last thing I want to do, it's not that I want to be completely out of the trade, but I want to make sure that I'm taking advantage of some of the opportunities that are being gifted to me along the way. And the more profits I take, the easier it is to let the rest of it run. All right. All right. Thanks, Ryan. Love your podcast. I listen to you on my runs and whether you know if now you have now you have ran a half marathons. What's your thoughts on selling covered calls or is more than 4 email? Oh, okay. Okay. I see. I think you might have had a couple of typos there, but that's okay because God knows I have plenty of them my own. Do I sell covered calls? I don't mind doing that against like long-term positions. They can even work on swing trades. If you think it's like a swing trade that you're going to hold for a few weeks and you can find the right premium to collect on it. Yeah, I mean, that definitely works. It does bring in some extra gains, but you are capping the profit potential. And I swear, I feel like when I do the covered calls, a lot of times it seems like almost with certainty that it runs right up to those strike prices. So yeah, it always sucks when that happens. Well, it doesn't. But I mean, it's a good trade and everything. But then it sucks when you can't collect more profits off of it. Oh, okay. So I get what I thought that might have been what Adam was alluding to about the second GDP. I think there's a good chance of it. I think too, though, you're not really seeing unemployment soar. So I think that's one of the other things that they take into account is the back-to-back negative GDPs alongside of rising unemployment. I think we're definitely going into a recession, whether or not we see it from a statistical standpoint or not. I mean, I think a lot of people are really hurting just with inflation alone. I think inflation, no matter what anything else says, is just brutal because everybody's paying a lot more. People are running up credit card debt to try to pay for basic necessities. Let's see. Yeah. Thoughts on KWEB? This is CraneShare CSI China Internet ETF. Boy, that is a mouthful. Buying trend line, kind of broken by default again there. I feel like that's like the most popular phrase of this particular live stream. Trend line broken in this rising channel right here. We can probably tighten that up a little bit to make it more accurate. I'd say it's kind of a choppy price range until it can break out of this range here. And that's not going to be easy because it's on an incline. So those are the harder ones to break out of. You do have maybe in the very short term some consolidation here that is going on to break out to the upside above 30.80. Now the thing with like anything China related right now is it's very high risk because the headline risk you got. I don't know if it's next month or next week or whatever, but you have Pelosi, she's going over to Taiwan, who, there's been threats being thrown back and forth or whatever, and you don't know what kind of instability that's going to cause for the markets. I mean, who knows? Watch Nancy to see if she shorts KWEB ahead of her trip. She does that, then man, she must be thinking, something big's about to happen. All right, Johnny G on Shop. So I was looking at Shop and I posted it earlier. Let's see here. Yeah, see, I didn't get the same breakout. This is the resistance level, and I shared this earlier today. I think maybe on StockTwits and Twitter, but you got this resistance and it's sitting just underneath it. So it was nice that it broke above the short-term resistance at 36.50. Maybe I say that right. 36.75. So there's a little bit of gains that can be made there. It's a wide channel, even though it doesn't necessarily look at it from a long-term perspective. It's a volatile stock to begin with. But if you can get above this, like I'd say maybe tomorrow, if it gets above 39.30, then you could have a full-on breakout on your hands. But again, and this is the problem right now with the market with these crazy whipsaws. It's making it very difficult environment to find really good reward to risk ratio setups to where you can minimize the risk while maximizing the reward. Something like Shop, I mean, maybe you can put it below these moving averages. That's a possibility, like 32. But even still, then you're looking at like $8 to the downside on a $40 stock. That's like 20%. So that's kind of steep. Holy shnikes. Like, I don't think I've ever had this many spam bots hitting the comments in one thing. Holy cow. So the target, if it can break out, it's not even so much the target that I'd be watching for. I'd be wanting to watch it at key resistance levels. So if we're just looking at it from a long-term perspective, you can see on the weekly, you got that consolidation still. It's still not quite out of it. There's some right around 53. So that would be a big move, right? I mean, somewhere between like 51 to 53. That's a key resistance level right there. Next layer would probably be around, starting at around 78 to about 88. That's going to be another area of resistance as well. So it's an interesting chart. I don't think you're necessarily out of the woods on that one yet. Let's see. Take care, Adam. All right. Tadpole asks about Apple. Freaking Apple. This sucker has just been on a tear. It's never given me what I would necessarily call a good trade setup though along the way. You have this heavy layer of resistance right here. See that right there? It's broken this declining resistance, but then you got this price level resistance that is just trading right underneath. So you got this inclining resistance, this price level resistance. That's going to be a key level to watch tomorrow right there. Does it break back down below? So that's what I'm keeping my eye on there with Apple. No worries about that, Kyle, man. It's okay. I can't even speak anything but English, so that's about all I got. I hear you there, Tad. Let's see here. Thoughts on snow? Yeah, I don't know if there's too many people that are bigger lowlifes in this world than spammers. Let's get a fresh scratch on this one. And they're just awful. There are people that can't do it any other way but trying to mooch off of everybody else's progress in life. It looks like cup or snow has like what I would probably call like a cup and handle pattern here. And I didn't see this before until now, but look at it though. You have like a cup and then you have the handle portion right there. Nice little consolidation. I have a feeling though the risk is still going to be difficult on this one. 159 with a stop loss below 141. Jeez, I hate that. See, I'm just trying to make sure. Yeah, maybe like even 158.50 you could get long on. There's just nowhere else. I mean, you could possibly put the stop loss below today's lows, which can work. The problem with that is that it's not necessarily a significant support level. It's a significant support level for the moment. If it breaks back below it, that's not a good thing. It's probably not something you want to necessarily stay long in, but ideally, I like to kind of put it below multiple layers of support. So like you have multiple attempts here to break the lows at around 141, 140. That's kind of like the ideal kind of stop losses that I like to play with. Hey, Skylar Brown is a big fan. All right, Skylar. Thank you. All right. Apple lost me 20K. Tried shorting it. Man, you can't be doing that now. That's one of the stocks that it's a hard stock to short. Okay, so Johnny G, going back to Shock because he's giving me a little more clarification of what he was looking at, but still, that thing still holds true, man. This sideways channel. Going back to January. Yeah, it's definitely broken that trend line for sure. But again, it needs to break out of that channel. That's going to be important. Got Tesla. Yeah, we're going to circle back to let's just circle back to Tesla right now. We talked about it quite a bit in the beginning of the show, so definitely go back and watch that. Let's look at what it's doing here in the post market now. Yeah, we're not getting anything. I mean, let's see here. Just make sure that it's updating here. Yeah. I mean, it's updating. It's still stuck in that consolidation there. So not getting much out of it. So here's the thing, Johnny G, on the Mary Jane stocks. You take something like MJ, right? Nice move over the last couple of days. Man, I tell you what, I have seen, let's look at Tilray, probably a better example. You get these kind of pops and then it just trickles back down lower. They are so freaking hard to trade, guys. CGC, I mean, it's like they're like destined to just keep moving lower. I mean, 2021, right? I mean, pretty good year for the stock market. This thing did nothing but just sell off every single freaking day. But a lot of volume in the recent days. It could, but I mean, has it even changed the trend line? Let's say on CGC, it's still got lower lows and lower highs. So it's hard to say that anything's really changed on it. On MJ, another ETF, yeah, still lower lows, lower highs. Tilray, more of a basing pattern probably there. Kind of trying to break out of it, but don't get married to these stocks. You get married to them, it can be a disaster. Johnny G, man, you're cracking me up, man. I don't know how much of a legend I am, but this way I don't feel too legendary. Some of those trades have beaten me up pretty good, but nonetheless, guys, as you can see, not the best week of trading for me. I've made one trade, but didn't really go my way. Took a butt whipping on it. I've made 3 trades so far in July. One of them has been positive. The other 2 have kind of kicked me in the rear. Again, I manage the risk, so it's not all that bad. I'm still way up on the year, which I'm thrilled about, double digits. And but you got to continue to, just because you're up or you're playing with the shop's money or whatever, it doesn't give you like the license to be sloppy with the risk management side. And one of the things that I feel like the better that over the years that I've gotten with trading, I think the more irritated I get at even them bother me as much 15, 20 years ago, because my losses were so much bigger. Like I would probably be like, that's not a big deal. But I think the more and more, I don't know if we'll ever be satisfied as traders. I think we tend to critique ourselves a lot more than we do in other professions or in other crafts. For me, I think I'm just as irritated today by like a 3% loss as I was 20 years ago when I had no idea what I was doing by a 15% loss or a 20% loss. And that's probably a good thing. It continues to cause me to hone in my skills even more, because if you told me, a long time ago, I could trade with 4% stop losses and be successful at it, I would have thought, man, you're crazy. But that does actually happen. So, any case, one last question here. Do I think that the bottom is in on the Qs? I'm not a person that tries to call tops and bottoms in the market. Do I technically believe that we've seen the worst in this market? No, I don't think we've seen like a capitulation from a technical standpoint that will allude to saying, okay, the worst is behind us. We still got the Fed raising rates like crazy. 75% is expected, maybe even 100 basis points next week. I said 75%, 75 basis points next week. 100 basis points possibly. Next meeting is expecting the same thing. I don't know if the economy can survive as long as we're continuing to tighten. They're also dumping, mortgage-backed securities. They're dumping all their treasuries. And you got China that's dumping their treasuries as well. So I'm not overly optimistic that we've seen a bottom in this market. Usually you haven't seen people throwing the towel yet. I think the fact that you're still seeing stocks like GME, AMC, a lot of the Wall Street bet stocks still trading at way too high of a premium is probably a sign that people haven't suffered enough pain yet for the market to actually put in a bottom. So that's my thoughts. That's my theory. Make sure you guys like and subscribe to this channel, guys. It goes a long ways to helping me continue to build this channel and to build this audience with you guys. I love having you guys here. The more people, the better, because I can continue to look at your ideas and thoughts. And if you guys have any more questions, leave them in the comments, man. Thank you guys. cheers to, I guess, some old elk here, and God bless.